Good day, everyone. This is Patrick from EasyFX Code Trading System, and this is Saturday, the 9th of September, 2023, and this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the second week of September. And across these three majors, they're all weakening against the US dollar. So as you'll see on the DXY, it's been still continuing its recovery. Only the Aussie dollar did not fall as much because it had already fallen much earlier, and it's trying to find some support. But the euro and the cable has been just weakening throughout the week, and especially with the ECB announcing their rates this coming week. So we'll see what's in store for them. And let's take a look back at last week's key US news that drove the US dollar stronger. Okay, so last week was the 1st of September, not first week of September. I misspoke in last week's video. I thought it was already the second week. So this coming week is the second week. And last week, the RBA held interest rate as expected, and still left it at 4.1%. So this weakened the Aussie dollar, as together with some news from China, which is still weakening in the Chinese economy. So that drove the Aussie dollar lower. And even though the GDP for the last quarter was still fairly strong, but this coming quarter could be a different story. But the main driver last week for the US dollar, there was the ISM services PMI, and that was stronger than expected. And this gave a boost to the US dollar and triggered further weakening for the majors and spot gold as well. And this coming week, there's quite a number of news from the US and UK, apart from the key one for the ECB. As UK jobs and GDP figure, GDP is expected to dip lower for this month. So we'll see, because the previous month was already higher than expected. So they're forecasting a lower growth, in fact, a negative growth. The CPI figure for this month, they're expecting an increase after a few dips already. So they're expecting a higher rate, both monthly as well as year over year. Then on Thursday, there's also Australian jobs report, but the key one will be the ECB's decision, where there's still a coin toss, and whether they're going to increase or whether they're just going to hold. So this will be a tricky one, and especially following that, there's also news from the US with PPI and retail sales. So PPI is expected to also increase slightly together with the CPI, and retail sales will dip because the previous month has been fairly strong. And then follow on Friday with the preliminary University of Michigan consumer sentiment figure, which is forecast to be slightly lower than expected. But yeah, with some strong US news coming up, CPI, PPI, and retail sales, it's going to be a very volatile week. And combined with the ECB rate announcement as well. So It's going to be a very tricky one this coming week for the US dollar and euro especially, as well as the pound sterling, because some of these indicators will influence the Bank of England's rate decision the following week, as will the US news also next week for the following week rather, for the Federal Reserve as well. But first up will be the ECB. All right, so let's move back to the analysis. Let's begin with the euro, where right from the start of the week, after a week close on the previous Friday, it continued lower on the start of the week, and after falling down below the daily 200 again, it continued lower on Tuesday and paused around the major support at the 107 at the 162 fib extension. So this is a significant support area, and that's a critical area now. The interim resistance will mark it as the 108 together with the daily 200 EMA, and we can move this strong resistance here to the swing low, at this swing low here. So US news together with the ECB rate decision on the Wednesday and Thursday is going to be a very volatile couple of days. So do be careful. And it's going to probably consolidate until news is out. Then there could be an attempt to dip lower before any kind of support is found to try to save it. But if the US news is any indicator for the Federal Reserve the following week, then it's going to be a problem as well if it's showing higher rates. So we'll probably need to add another layer of support at the 106. Let's see if it's able to provide any support. Now we could also move the fibs and to see if we can get a better, clearer picture of potential targets. And yes, there is we move to this recent swing lower. And we could also have a support zone just below 106, targeting the 162 fib extension at the 105.80 area. So let's mark this one here as major support. And at the 107 now, it's going to be interim. All right. So let's see if it's able to hold, or if it's going to cut through the 138 fib extension and trying to target the 162 before finding any support and some recovery or pullback. So this will be a very tricky one for next week. All right, so let's compare this weakness on the euro with the US dollar index, the DXY, and that should be also recovering. And here's the US dollar index, where it did manage to push through higher past the 104 round figure. And there was a pullback to retest that recent swing high, and it managed to bounce back up on the Friday itself to close right near the close of the previous day. So for the week, it's a very strong bullish close here, and looks like it's pushing towards the 105 with the major resistance there. So 105 is now a major support, major resistance. Interim support is at the 104 now. And then below that, you can use the 38 fib. But before that, let's see, we may be able to change this fib and take this reversal of this swing move lower. And yes, it has hit the 138 fib extension. So this zone of this swing high, and below that to the 103, that's the major support zone now. And if it does break out higher above 105, now I'm not sure whether it's going to push up to the 162 fib extension. That's going up to the 105.70 area. Let's see, with a number of news coming up this week ahead of the Federal Reserve's meeting the following week. So we'll see the CPI figure, PPI, and retail sales, the key drivers this midweek. And yeah, can't deny that it has been bullish for quite a number of weeks now, and with a strong move higher last week. It's attempting to test this swing high, which is the high for the year. At the 105.50. So that could impede any progress if it does break above 105, and could stop before the 162 fib extension. So let's see. Okay. Do watch out for this midweek news coming up from the US, and especially with the ECB as well, compounding the effect on the Thursday with their rate decision. Okay, let's move back to the other pairs. Okay, moving on to the cable. And as with the euro, it has been weakening from the start of the week, and especially triggered on Wednesday with the ISM services figure, and dipping right into the support zone at the 125 and the daily 200 EMA. But unfortunately on Thursday, it did close below that to the 21 Fib area, and could not recover on Friday. So for the week, it's looking very bearish after the almost gravestone doji the previous week, and falling below the weekly 55 and targeting down to the swing low and the 123 round figure. So that's perhaps we may need to update this. And if we take this swing low here, that's going to be, that's the support at the 123. But we can also take this continuation swing lower, a bearish continuation move from the low of the bearish channel or the bear flag, and you'll see the confluence with the 123 here, right at the 162 Fib extension. We want to take this slightly lower to this swing low, but that's okay. We can use this first. And so the major support is at the 162 Fib, 123. There is an interim resistance now at the 125. There is also potentially support at the 138, but we won't mark that for now. Major support, major resistance up at this level, just above the 127 as well. This level was a previous swing low, I believe. Yes, swing low all the way back in 2020. And also the daily 55 EMA is sitting there as well. So that's going to be a major resistance, but we can bring it down lower to this swing low that we just moved to. So that's also possible. So yes, a lot of UK and US news this coming week and midweek. UK GDP, and also this, before that there's also jobs report, but the US is the main one to look out for: CPI, PPI, and retail sales figures. So any of them could trigger a volatile price action, and it could influence the Fed the following week with their rate decision, along with the UK news for the Bank of England. All right, so let's see if it's going to drift lower or crash through very strong into the 123. Whether it's going to consolidate first until the following week with both Federal Reserve and the Bank of England announcing their rate decision. All right, let's move on to the Aussie dollar. And after a violent drop on the Tuesday with the RBA holding their interest rates, and with further weakness from China, that already broke through the key support and it's trying to hold on. And the next major support is at this 200 pip extension here at the 63 round figure. So this area now is going to be an interim resistance. And this zone is going to be key resistance now at 65 round figure, and the 138 pip extension. Let's remove this for now. And take a look at the weekly time frame, and that was the break of the bear flag. Where there could be further continuation move. Now it is possible if we also take a reversal fib, and it also aligns with the 63 at the 138 fib extension, so that should be fine. We can leave it as it is for now. We'll check whether we need to modify the fib next week if it does break down further. All right, so a lot of major news next week and a lot of volatility expected. So do have a safe week and a good trading week, and cheers for now.